This video will describe the process of building your stock portfolio. The goal of Simply Investing and this platform is to help you build a resilient portfolio of stocks that will provide you with growing passive income. The key words here are resilient, growing, and passive income. A resilient portfolio is one that is not negatively affected too much by market conditions or stock prices. Growing income means that your portfolio continues to provide you with increasing income via dividends each year. Passive income comes from dividends. Companies pay you regularly to own their shares. You can earn dividends while you sleep. The focus of Simply Investing and your focus should be on growing passive income rather than on stock prices. Without dividends, you're only hoping for the stock price to go up. But hope will not cover your expenses. Only dividends can do that. Now, let's take a look at the process of building your stock portfolio. Start with the top ranked stocks. These are dividend-paying stocks that are of the highest quality and undervalued. These stocks have met all of the 10 quantitative rules of Simply Investing. In the long term, these stocks have the highest potential for capital appreciation and dividend growth. By default, stocks are ordered from highest dividend growth to the lowest dividend growth. Start with companies that have a history of many consecutive years of dividend increases. Remember, you are still responsible for applying rules number 1 to 4 and number 12. If you already own stocks on this page or are looking for more diversification, you can then consider the runners-up stocks. These are dividend-paying stocks that have met 9 out of the 10 quantitative rules of Simply Investing, have not had a recent dividend cut, and are priced low. In the long term, these stocks may also have the potential for capital appreciation and dividend growth. By default, stocks are ordered from highest dividend growth to lowest dividend growth. Since these stocks get an SI criteria grade of 9 out of 10, make sure you are comfortable with the one failed SI criteria. All failed values are shown in bold and the cell is also highlighted. Remember, you are still responsible for applying rules number 1 to 4 and number 12. In the long term, build a portfolio of stocks across the following 11 sectors. You may not be able to diversify immediately when you start building your portfolio. However, over time, certain sectors will be out of favor and in decline. And this will provide you with an opportunity to acquire quality stocks at low prices. It takes time to build a resilient portfolio. Never rush into buying companies when they are priced high, or in other words, overvalued. Remain patient and disciplined. Here you can see a list of stocks that are overvalued or priced high. Stock prices go up and down in cycles. Remain patient and a stock will eventually become undervalued. Remember, you are a long-term investor. Think in terms of decades, not months or weeks. Maintain a long-term perspective when it comes to investing. Your focus should be on building a portfolio that generates growing income each year and not on stock prices. Use the 12 rules of Simply Investing as your guiding principles throughout your investing career. If you're looking to learn how to calculate the SI criteria values for yourself, or apply them to international stocks, or expand your investing knowledge, consider taking our online Simply Investing course. This course provides more than 30 video training modules, provides real-life examples, and covers the 12 rules of Simply Investing in detail. Learn more at simplyinvesting.com. For more questions and answers, have a look at the FAQ section located here.